Nasdaq's up 1% today. That's pretty nice little bounce back. S&P 500 up 0.85%. However, this is all kind of under scrutiny in about 10 minutes. You have CPI, right? So inflation numbers come out, and that is going to either just completely help out this rally to get the ball rolling again, maybe, or it's going to kill all the fun. So here's the issue with CPI, right? The market is really looking to CPI to try and save the day. You have some problems in this situation, but I actually want to just go out and say, first of all, what's most on my mind right now is that yesterday I bought the dip pretty hard. I still have cash available, but I definitely went shopping yesterday. I bought a lot of stocks. I bought a lot of what I bought specifically is the IGV, which is an ETF that tracks a whole bunch of technology and software stocks. I bought it in the high 80s, and it's bounced back here a little bit. We'll see if it has any sort of follow through. But I actually bought this as this is kind of crazy, a weekly chart trade, not necessarily an investment, a weekly chart trade. I have a stop loss on this order. If this thing plummets, I'll get out. But this is a weekly chart level that looks so solid to me. I like software for the long term anyways. In terms of like long-term investments, that's typically my favorite place to invest is technology and software. Like everybody else, everybody loves technology, but it makes sense. Technology is where the growth is at, right? But technology has finally had a little bit of a breather, right? The software ETF, IGV, is down at one point here, 20% peak to trough. Could it get to 30, 40%? Sure, maybe it could. But I think that there's a good chance that a buy the dip kind of opportunity is in the process of happening. The NASDAQ, to me, may have a little bit more room to run to the downside if especially if inflation data comes in hot today. But I'm buying this dip, and I just want to make that clear because from my role here on YouTube, I know my thumbnails and titles have been kind of chaotic here recently, but just so it's black and white, I am buying this dip. I do have cash available, like I said, so I'm looking to buy the dip more if it keeps going down. But I actually think that we're getting close to a bottom here. And maybe that's famous last words, but some of the reasons I say that is that the VIX seems to have kind of gassed out here. We could still have one more flush event. Like if CPI is just terrible today, like if CPI is super hot today, maybe you just get this move and maybe that happens. My opinion on it is either we've already started to bottom for the stock market, or we're going to get another flush move, then bottom. I think that right now, everybody is sold. Everybody believes, oh no, now we're going into a recession, right? Recession fears peaked up massively here recently. So everybody thinks that, right? And when everybody thinks something in the markets, when everybody starts to believe something, a lot of times the market has a great ability to do the exact opposite of what everybody is kind of thinking.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
All right. Initial move is higher here. And not only is it higher, that's a rip higher off the initial jump. NASDAQ's up 1.5%, 1.8%. There we go. Let's take a look and see what the print was. Wow. 2.8, guys. That is excellent. 2.8%. Inflation cooling down. Very nice. That's going to be weak for the US dollar. That's great for stocks. Again, this gives the Fed more wiggle room to cut interest rates. So if all those tariff fears materialize and we do start to see some growth slow down, well, hey, you know what? The Fed can cut rates to help. That's what the market just said. That's my best guess. I'm trying to interpret the markets every day, but what it seems like we just saw is a very nice pop because look, 2.8% inflation, that gives the Fed, what does it give it? Ammunition. It says, oh, stagflation concerns, right? Maybe not. Because inflation cooling means that we've got just... Now, here's what we didn't want to see, right? We've talked about this a lot. Here's what we don't want to see. The economic growth is projected now. A lot of people are forecasting for slowdown, but a lot of people have been forecasting for inflation to go up. But today, if you only have one of these issues to deal with, that's a lot easier to deal with. The Fed can cut rates if inflation's cooling off. And that's what I think we just saw. So that looks great for stocks. And again, like I said, I yesterday, I really went shopping on a lot of stocks. We'll do stocks later. I've been doing a lot of stocks recently. Let's talk gold. Come back to this. This is nice for gold as well. Not a huge move here higher. I mean, on the 15-minute chart, it looks huge, but take a look at the hourly chart. You can see we're still kind of sitting up against this 4-hour chart level of resistance. From a 4-hour chart analysis perspective, gold sitting at resistance here. I'd love to see that break out today. There we go. And you also have, of course, the all-time high resistance as well. Bulls have been... I mean, it's just been a choppy week for gold. Gold's not really made too much of a substantial move in either direction. It continues to be my largest position in my portfolio. I am long GLD, which is an ETF that tracks gold, and I'm looking for this move. I'm looking for the breakout, the resumption of new highs. I think that could occur, especially with cooling inflation. This is a good print. Again, I'll go ahead and say this. I could... anything can happen, but I would actually be surprised if we didn't end higher today for gold. That looks really good. You have soft inflation data. Core CPI also came down. We'll take this. We'll take this all day long. That's excellent. Cool inflation should be good for gold, should be good for stocks. Now, I want to warn, this is good for gold and stocks because inflation data is cooling, dollar weak, right? And if you're wondering why the dollar didn't move a whole lot lower, well, the dollar's already been getting crushed. So I think the CPI just kind of confirmed, okay, yeah, we've had a massive sell-off in the dollar. Maybe we're not going to have a huge pop to the upside. That being said, while this data that just came out, guys, that's good for stocks, good for gold. The challenging thing of this market in 2025 is that we are in not only like a 24-hour news cycle, we're in like an hourly news cycle. Like there's something new in the markets all the time. And I think that, before you just jump to the conclusion of like, oh, good, stocks are just absolutely face ripping higher from here, you just have to be cautious because this market, again, the day's going along and then all of a sudden a message from Trump hits or Powell says something or Putin does something. Like this market is just so chaotic. CPI, I would say, is a great print. That's a great print. 2.8%. We love to see that. That's excellent. And I think that, you just have to be mindful that that's one thing in our favor for the bulls, for stock bulls, for gold bulls, right? We'll take that. But it's not the only thing, and there's so much stuff out there. So I just think you can't be binary in this market. You have to be very, very cautious, very patient with a lot of stuff. That being said, a CPI print like that looks excellent. For those of you who are in our VIP room, I'll tell you what I'm doing with gold. So I am looking for a pushback to those highs. So let me see if I can go to the daily chart, show trade. So here is the trade that I'm in. We're sitting at just shy of a 1-to-1 risk to reward currently. So I have my stop loss down here. We just looked at the 4-hour chart. We're kind of range bound. For my gold trade, what I'm looking for is we've come down to this support level. We held this nicely. We sort of put in an ugly higher low. What I need to do, or what I need to see in order to trail my stop loss, is to see price action do this. If we can push through those highs and close above the previous all-time high. If we see that, then I'm going to take my stop loss and I'm going to move it into profit at that time. So let's just say, for example, the scenario is this. Let's say that we get this kind of move in the next few days. Now, I'm a swing trader, so I'm not, rushing to make 15 trades a day or anything like that. Like I'm watching this. I'm saying, okay, I've got my gold trade. I like the fundamentals, right? Inflation data coming in today. Very nice. That will help the case for gold. Doesn't mean gold's going to go up guaranteed. It helps the case, I would say. So inflation cooling a little bit. If we get that move, right, at this point in time, what I would look to do would be to take this stop loss and move it up and just trail it behind this higher low, if that occurred. And then if we got another higher low at this time, I would look to take that stop loss and move it further into profit. So I don't use a strict take profit. I know I have a take profit kind of showing or a like an order here on TradingView's tool, but in actuality, I do not have a take profit. I just trail stops. And the reason I do that is because I'm a fundamental trader. I focus mostly on macro. And so when I see, a chart trending up, I do focus on the technicals as well. But as long as the fundamentals continue to look really good and the technicals are kind of playing along, this is how I manage a position. So if gold can break away to the upside, I'll trail a stop further into profit. NASDAQ, let's take a look at the 5-minute chart just to see the post-news reaction. So you can see the big pop here initially, giving back a little bit of those gains. This market has been, here's the warning for the NASDAQ bulls. The warning has been, the pattern is not on our sides, okay? From a short-term trading perspective, bears are in full control here. I'll clarify again, if you are watching the daily chart, we discussed this just a little bit ago, the bears are in control in this chart. For bulls to take control, I really think you need to see a break back above this area here. But specifically, one of the key levels that I'm looking for is a retest and breakout above the 200-day moving average. So take a look at your 200-day moving average. This is a really key thing for a lot of equities traders, a lot of stock indices traders love to keep an eye on the 200-day. So if we get this move, right, what you do not want to see is you don't want to see sellers completely take over the rally, right? You don't want to see this. This would be worst case scenario, in my opinion, is you get the fade or you get the move up and then the fade sell again. We want to see, if you're a bull, you want to see this kind of recapture of this area, but then a breakout, a true break of structure here to the upside. If you get that, I'd say we're looking really good for a pushback to the highs. The market is so scared right now, and those are the types of opportunities where I think you can get excellent risk to reward in indices from a long-term investing perspective, But then even from a short-term trading perspective, if we start to see, hey, look, inflation data was pretty good. JOLTS job openings was pretty good. I've been cautious on indices, but at a 12, 13, 14% pullback in the NASDAQ, a little bit of glimmer of hope could really get this thing ripping back higher. So right now, I don't love the NAS, right? It's at a neutral reading on the Edge Finder from a short-term trading perspective, but I will be watching the technicals to see if they can start to recapture key levels of resistance.
So on the weekly, we've got this really, really nice level through here that would provide a very strong break and retest pattern. We're very deviated, or we have been very deviated from the weekly 200 moving average, which is this blue line. Historically, it's very normal for us to touch and then what's the word I'm looking for? Rally up or deviate, whatever you want to say is fine. And then we have a reversion back to the 200. Same thing happened here. Obviously, that was COVID, but it still happened. Rally up, reversion, rally up. Are we now ready for another reversion on the weekly time frame? Maybe. Who knows? But it's something I'm paying attention to. I'm not going to, I don't want to sit here and be a super bear or doomsday guy, but, I'm just reacting off what I see. And right now, I don't see much I want to trade on the S&P or the US markets in general. Anything on Swiss yen, Euro Swiss? Not really. I took Euro Swiss longs, was it yesterday or Monday? Just took 1%, wasn't anything too crazy. So I'd like to get back into this market at some point. I'm just waiting for a pullback off the previous high. We've got a pretty nice double top here. So yeah, I'm just waiting to see if we can get some sort of downside, and then again, I'll be entering again to the long side. Swiss yen is tricky actually, because technically the yen seems quite overbought. So it's not a huge shock that we're seeing some of the yen pairs have pullbacks today. Generally speaking, I'm still very happy with yen longs. I don't see any issue there. It's more a case of just sitting through some of the noise and just letting the markets do what they need to do. I've got no concerns. I might get stopped out. If so, I'll enter again. No problem. James, opening your Discord for me for free of charge. Nope. USD CAD. Yeah. I think USD CAD overall, I would say long, just because I don't see Canada coming out of this trade war on top. However, I'm not sure I would really want to buy the dollar either. So I'm kind of just sat on the sidelines with dollar CAD. In fact, all of the dollar pairs, even if I'm bullish on it like I am with dollar CAD or dollar Swiss, it's more case I'm just sitting out because I don't want to be involved. But like I said, I would lean more towards going long on this market. So something possibly just like this would make sense. But again, we've just had low CPI, so the dollar might depreciate further from here. Ball out. You didn't give me any winning trades, buddy. Actually, I will have you know, gold is back at entry almost. So you've actually not paid for anything just yet. If you give me some crazy call, then maybe I'll give you a free membership. Give me a signal to take my signals. Euro dollar. Okay. So I'm just looking for a complete, I'm looking for a pullback to then start going long on pound dollar and euro dollar. So I don't really have a reason to go short anymore. We had the news of German fiscal stimulus. So that was a great driver. We've also had the hawkish ECB, also a great driver. We've got a very bearish dollar at the moment. We've actually got euro dollar on the edge finder popping up bullish. Let me show you that. Give me a second. Here. So yeah, again, it's pretty much all blue. The only thing is seasonality, which I don't care too much about seasonality, especially in G10 currencies and PMI, but that all services, but that's it. So everything else is still looking very positive. The central banks are positive for this market in terms of bullish. So yeah, I think If we can find somewhere to go long, that's fine. I'll quite happily take a long position. But right now, it's just a little bit too high. Gold choppy, it is indeed. Ball out, it's free for 7 days, and it's $100. James provides good value. I appreciate it, Bashi. Thought money was no object to helipilot. Who's a helipilot? James, what do you think about JPY from the COT data? It seems extremely bought. Is it a good thing? Yeah, I'm still bullish on the yen. The problem is it's just a little bit overbought, I would say, at the moment. So it's not really had much of a pullback recently. I'll just put this onto area here. So it's not had much downside. We've had a few pullbacks, but nothing too major. So it would be very normal for this market to have some further downside, but that wouldn't break my idea of being long on yen. So first target I've got is at 71.05. But again, the problem is that I've had is quite a few people have taken the yen long idea, and they've tried to put it onto day trades and sort of scalps, and it's worked here and there, but people aren't accounting for sort of the timeline I've got for yen longs. I've said it before, I'll say it again, it's sort of a 12 to 18 month play. It's not something I'm looking to just take next week or this week and get out of. It's a long-term position. Scared James will hit me. Why would I hit you? What's going on? Do I day or swing trade? I do both, Pombo. CAD rate cut in 2 minutes. Mohammed, I wouldn't expect much. Rate hikes, rate cuts, rate holds are normally priced in. Unless there is something interesting in the meeting, then likely it'll be pretty muted. $300? No, that was a bug. I had that on the website, which actually is completely my fault. I didn't realize it was saying $300 a month. So no one joined for like 3 weeks, and I was like, oh, it's a bit strange. Need to up the marketing. And then someone messaged me this morning saying, I can't afford $300. I was like, we don't sell anything for $300. I realized I kind of messed up though. So James, the news coming out for CAD, you want to see have any effect? Not unless we get something out with expectation. Yeah, look at that. Bashi being the testimonial. Sweet. Okay. Like I said, I apologize. I might be a bit quieter on this one. I'm exhausted. I've got like no energy, so I'm just sort of taking it slow today. London Scam is a good song. Is that the guy that got arrested because of his carpet on TikTok? I heard about that. That's quite funny. Getting bullish scores in XXX JPY grids, it doesn't matter. Like I said, it's 12 to 18 months play. The edge finder will flip-flop around in between that time. I'm looking at long-term central bank policies, not immediate data releases.
CPI data came out this morning. It was slightly better, which wasn't a huge surprise. We were tracking this since last week, and we saw a pretty decent flush from the recent highs in this would be December, January, and then flushing back down all the way to the September lows. So Trueflation is a third-party reading, and they're way the heck down here towards 1.32. It's going to be an interesting next couple of months, like looking at CPI, PPI, core PCE to see if there are improvements. You take a look at your edge finder inflation data, and we'll see that the trend is actually pausing or even going lower. So for the first time in, I believe, 5 months. So here's your year over year. So forecasted, you've got finally the nudge to the downside. So what's been trending up for 1, 2, 3, 4, 5 months has now finally broken slightly. Now it's not, celebratory levels, but the fact that it's trended lower and it was actually a forecast for a slightly lower print than previous. So your month over month CPI, this is year over year CPI core. So you're excluding food and energy here. The previous print was 3.3. This month's forecast was 3.2, came in 3.1. So that is hopefully seen as a bit of a positive. Okay. The month over month CPI core, previous was 0.4, forecasted 0.3, came in 0.2. That's a positive. Your month over month headline CPI, previous is 0.5, forecasted now 0.3, came in 0.2. That's good. And then your headline CPI year over year, previous 3.0, forecasted 2.9, came in 2.8. So this reading overall is pretty positive, which is not a bad thing. Now, I think price action ultimately is going to determine whether or not this is a way to carve out lows and see the market relieve a little bit of the pain and stress that it's caused the last 3-4 weeks. I think this is pretty simple. Looking at the Mag 7 today is up around 3, or semiconductors up around 3% today. Yeah, 3.3%. Mags is up like close to 2, not MAGA. Ugh. Mags is up around 2%. We had the close yesterday, up around 2.6%, still holding that gap slightly. This would be an important one to watch. If the Mags can close back above the 200 moving average, I wouldn't be surprised if this is just another kind of swing. I think the easiest trade right now to look at, if there's any hopes of a pullback, would be we just have to look to carve out these lows. Okay, so all I did was took a Fibonacci swing from high to low, and that was based on yesterday's low. So we did poke lows yesterday and then rip off those lows a little bit. So I've got a 613 high and a 552 low. So percentage-wise, that is your 10% correction. In fact, it's like right at 10% or pretty close to it. So right at that level, right around that 10% correction, like almost scary, like to the decimal point, we're pretty much at a 10% correction. So if that's a technical spot, the market's interested in saying, okay, good enough, it's a correction. Maybe that is a spot to build off a low. That's why I put a fib on here. So a high to low and a 23% pullback is very shallow but very attainable. A 30% pullback is a GAN level, but oftentimes what I'll see with a GAN level is the price will be tested, and that's a really key spot to see if the market's going to come back and retest the low. Okay, I don't necessarily want to be short there, because if that GAN retracement level fails, then we're talking back into the 382 or back into the 50 pullback zones. And if you look left on this chart also, this structure right here, previous low, little choppiness around this area, little indecision right there, gap during the election, okay? That's where I see price as a potential pullback. So this whole conversation I've had about de-risking and getting out of some crappy positions, or in the short term, looking at some bullishness, all of it qualifies. If I'm doing short-term bullishness, my profit target is going to be somewhere in here, right? My de-risking is if price comes back in this area, whether the broad market responds and correlates, really nicely. If the indexes pull back in this zone, I want to trim some of that exposure. Make sense? Okay. So that's where I'm at. But for right now, price is pretty calm on the day. I do have a broken wing butterfly in at 55.25, which is just below yesterday's low. I'm going to see if price will just kind of stay here for the day. Give me 50 cents on that broken wing butterfly. I've got another trade in for $2.50, and I'm just trying to pull out 50 cents of credit and see if this market just stays relatively calm for the first 60 to 90 minutes of trading. So right now my Yeah, I'm close. I've got a 250 credit traded for about $2.25, $2.30. I just need a little bit more time, hopefully, in the trade. And then my broken wing is going to be something I'll manage towards the end of the day, but I'm looking to see if price just stays away from yesterday's low. That would be nice. I am watching the futures market pretty closely this morning. It's an interesting mix. Let me get this out of the way. The S&P, and this isn't like perfect, but I looked at the 830 candle as a potential range, and I probably need to make more of the adjustment out in 30 because ES is broken a little bit lower, but NASDAQ has not. So it's almost as if NASDAQ's up around 1.18%, S&P is only up about 0.4%. So I think it's because NASDAQ took the hit a little bit harder. We were down like 13+% on the NASDAQ, right? So same thing applies on QQQ. Take a swing, high to low, and your correction should be around 13%. Yep, 13.7% from high to low. So that's about a 541 all the way down to 466 or 467. And again, look at your simple levels. 23% level, 30%, 38%. I mean, that's a very shallow window for price to pull back. As far as if looking left, this area offers some decent structure around that 490 to 495, or a really nice spot would be pulling back towards like the 50% zone, which is back in here. So again, de-risking would be if price is coming back into this level, conservatively de-risking or taking some near-term profits. If we pull back a little bit more, de-risking and taking some profits. So anywhere between about 490 and 510, about a 20-point window on the QQQ. I would get out of trouble. If you've got some overexposure in tech, I would just try to do some work and get out of trouble. Okay, so I just did that actually. BGP was asking, can I just apply the same logic? Yep, and that's exactly what I'm doing. So that's what I'm watching for. We just want to see if the market is capable of carving out some lows, not making fresh lows. A gap higher today certainly helps, but don't be shocked if the market ends up trying to fill this gap, but doesn't take out the lows, and then it uses that as a rally point. So just watching technicals. You want to get into the nitty gritty of all these levels. I mean, go down to your smaller time frame. Okay, and if price is going to pull back into this close at all, if this is just like a slow move, you could look for a trend line break, see if price wants to break and go higher. There's a monster gap up here to get filled, and just know your fib numbers. So you can do this on a smaller time frame. Smaller time frame. Take your fib from the high, go all the way down to the low. And this is not perfect, right? Like this may not be like the exact high or low, but I mean, within reason, I think this would make sense that there's my 30%, there's my 38%, there's my 50%, and just watch and see how price behaves. Because if we look at for short-term trading, look at the asymmetry here. If I was buying it right here and I put a stop loss below the lows, okay, I have a 1-to-1. This would be around the 30% pullback zone. That's about a 1-to-1, maybe slightly in favor of the push to the 30%. But if we get to a 38%, okay, we get to a 50%. Now you're offering, if this is my risk, if we can get through this level, this is offering more reward than risk. This is offering more reward than risk, and so is this. So your bigger win to be protecting profits would be once you hit that kind of asymmetry. Once you hit that surplus of reward to risk, then you're in good shape. But the important thing is, can you find that trade? And sure, just hit my take profit on SPX.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.